Hello, and welcome back to the channel. I'm Algabot, your guide to the world of automated trading on MetaTrader 5. Today we're putting a clever little price action system under the microscope, an expert advisor called Coiled Range Breakout. What makes this one special is that it uses no indicators at all. No moving averages, no relative strength index, no Bollinger Bands, nothing. It reads the market from raw candle highs and lows alone. It hunts for moments when price coils up tight, like a compressed spring, then it rides the release. By the end of this video, you'll understand exactly how it works. Let's dive in. So what exactly does this strategy do? Coiled Range Breakout is a volatility squeeze system built entirely on candlestick structure. The core idea is one of the oldest truths in markets. Price alternates between expansion and contraction. It moves in wide, energetic swings, then it pauses and consolidates into a narrow range, and then sooner or later it breaks out into the next big move. This expert advisor is designed to catch that breakout. Here's the key concept. The strategy watches for what it calls a coil. That's a handful of bars trapped inside a tight horizontal box, sitting right after a stretch of much wider bars. When the recent range becomes compressed compared to the market's normal swing, energy is being stored, just like a spring being wound up. The strategy doesn't try to guess which way price will jump. Instead, it waits patiently and lets the market reveal its hand. The first decisive close out of that box, in the direction of a strong expansion candle, is the trigger. Because everything is measured from the candles themselves, this approach is beautifully self-scaling. There's no fixed pip or point math anywhere in the logic. That means it adapts naturally to any symbol and any time frame without you needing to retune distances. The natural home for this style is a liquid foreign exchange pair such as the euro against the dollar or the pound against the dollar on the 30-minute or 1-hour chart. Who is this suited for? This is a breakout and momentum traders tool. It will appeal to anyone who prefers patience and structure over constant activity, someone comfortable waiting for a clean setup rather than forcing trades. Remember, this video is purely educational. We're studying how the logic is built, not promising any particular outcome. With that framing in mind, let's open up the engine and walk through exactly how it makes a decision. Let's walk through the exact logic step by step. The strategy only acts once per newly closed bar, so it never reacts to the noise of an unfinished candle. When a fresh bar closes, it goes to work. First, it builds the box. It takes the most recent closed bars, the number set by the CoilBars input, and finds the highest high and the lowest low across them. That high becomes the box top, that low becomes the box bottom, and the distance between them is the box height. This is the coil, the tight consolidation we want to trade out of. Second, it measures normal. It looks at a window of bars that came before the coil, set by the BaselineBars input, and calculates the full range from the highest high to the lowest low over that window. This represents the market's typical swing in recent history. Third comes the squeeze gate, and this is the heart of the filter. The coil only qualifies as a genuine squeeze when its box height is no larger than the compression ratio multiplied by that baseline range. In plain English, the recent range must be meaningfully tighter than the normal range. If price hasn't actually compressed, the strategy waits. Fourth, it demands a decisive trigger. The just closed signal bar must show real expansion, meaning its own high to low range is at least the expansion multiple times the box height. This filters out the weak, half-hearted pokes that fool so many naive range systems. Now for direction. For a long trade, the EA signals when that expansion bar closes strictly above the box high and is bullish, meaning the close is above the open. That's the spring releasing upward. For a short trade, it's the mirror image. The signal bar closes strictly below the box low and is bearish. The market chooses the side. Risk management is structural, not arbitrary. On a long, the stop loss sits just beyond the opposite edge of the box, below the box low, buffered by a fraction of the box height set by the stop buffer fraction. The reasoning is elegant. If price falls all the way back through the coil, the breakout was a fake, and the trade is invalidated. The take profit is then placed at a fixed multiple of that stop distance, controlled by the reward ratio, letting the post-squeeze expansion run. Only one position is held at a time, and the stop and target manage the exit. Let's bring this to life on the chart. Notice there are no oscillators here, because this strategy reads pure price structure. The two blue lines mark the coil box, the highest high and lowest low of the consolidation. On the left, you can see the first 3 candles swinging widely. That's our baseline, the market's normal range. Then watch what happens. The next 4 bars shrink into a tight little box, pinned between the blue lines at roughly 1.0860 on top and 1.0850 below. Price is coiling. Because this box is far tighter than the wide swing before it, the squeeze gate is satisfied. Now the spring releases. The 8th candle surges upward, a strong bullish bar whose range is much larger than the box height, and it closes decisively above the box top. That's our buy entry. The market has chosen the upside. Over the next 2 candles, price expands higher, exactly as a freed coil should, and reaches our take profit. The structural stop, meanwhile, was tucked safely below the box. Watch what happens next, because the same logic works in reverse. After that rally, price stalls and forms a brand new coil up high, 3 tight bars hugging a fresh box around 1.0905 and 1.0895. Energy wins up once again. Then the 14th candle breaks down hard, a bearish expansion bar closing firmly below the box bottom. That's our sell entry. Price slides lower into the final candles and hits the second take profit. 2 clean setups, 1 long and 1 short, each driven by the same coil, squeeze, and breakout sequence. This illustration is for educational purposes only. Now let's go through the inputs so you can tune this to your own taste. The first is coil bars, defaulting to 4. This sets how many bars form the consolidation box. Fewer bars make the coil more reactive and frequent, while more bars demand a longer, more established squeeze. Next is baseline bars, defaulting to 20. This is the window the strategy uses to measure the market's normal range before the coil. A larger value gives a steadier sense of normal, while a smaller value adapts faster to recent conditions. Compression ratio defaults to 0.50. This is the squeeze threshold. The box must be no more than half the baseline range to qualify. Lowering it demands an even tighter coil and gives fewer but cleaner signals. Raising it loosens the filter and lets more setups through. Expansion multiple defaults to 1.0. This controls how large the breakout candle must be relative to the box. Increasing it insists on a more violent, convincing thrust, which filters weak breakouts but also skips some real ones. Stop buffer fraction defaults to 0.25. This adds a cushion beyond the opposite box edge for the stop loss, as a fraction of the box height. A larger buffer gives the trade more breathing room at the cost of a wider stop. Reward ratio defaults to 2.0, meaning the target is twice the stop distance. Push it higher to aim for bigger runs with a lower hit rate, or lower it for more frequent but smaller wins. Finally, lots sets your position size, defaulting to 0.10. And magic is simply the identifier the EA stamps on its orders. Always test parameter changes carefully before applying them. And that brings us to the end of our deep dive into coiled range breakout. We covered how it spots a tight coil after a wide swing, how the squeeze and expansion filters confirm a genuine breakout, how it lets the market choose long or short, and how its structural stop and reward-based target manage every trade. We also walk through each parameter and how to run your own backtest. Remember, everything here is educational content only, and nothing in this video is financial advice. If you found this useful, please hit that like button, subscribe for more MetaTrader 5 strategy breakdowns, and drop a comment telling me which EA you'd like me to analyze next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.